Hi everyone, it's Alissa, Coram, and Ed Carson here with a look at the stock market today. And on today's show, we're going to be talking about two stocks showing compelling chart action heading into their quarterly reports tomorrow night. Plus, we have Google parent Alphabet set to report earnings any minute now. So once we get those numbers, we are waiting in the wings to analyze that for you live. But first, we want to talk about the major indexes closing the day solidly higher, with the NASDAQ leading the gains up about 1.2%. So a strong session for tech stocks.
It was nice. I mean, it's not sort of in the middle of nowhere between one consolidation and moving up to other places, but it was nice action and some really good stocks, acted really bullishly today.
That's right. We have some software names showing some compelling action. So starting off with Tableau software, the ticker is Data, closing the day up 1.3%, just a hair above a buy point. It did come off of the intraday's highs here, and this was kind of a low volume breakout, but a breakout nonetheless heading into the report.
Yeah, I mean, that makes it a little bit, bit cautious, and I would be cautious, heading into earnings. But it's one of many software stocks breaking out. It's been doing pretty well, clearing that area, relative strength line, acting pretty well. And a lot of it in the database group. Splunk tried to break out, though that one backed off. Still positive action throughout.
That's right. The report coming tomorrow after the close could potentially be a catalyst here, but I think it is worth noting that in addition to the low volume, we have that RS line lagging a little bit, even though the stock is hitting a new all-time high. So definitely important to watch that RS line.
Absolutely.
Okay, and next on our list, we want to take a look at Paycom software, also reporting Tuesday night, continuing the gains here, up about 3.5% above average volume here. It's only had one down day in about the last 15 or so sessions, so it's just really been climbing up the right side of a base.
Yeah, that sometimes happens. Often you see a handle form, but sometimes it doesn't. I mean, we'll see. It has earnings tomorrow. Paycom is benefiting a little bit from Ultimate Software getting a buyout offer. They're both in the human capital management software space. But yeah, Paycom has had a real big run. You can see that relative strength line way into new high territory. So this is actually very positive. It'll be interesting to see how it does with earnings tomorrow. But Workday is another one more in a larger, competes with larger companies, but again, another one in that group doing very well.
And Paycom also rising in tandem with the news that its peer Ultimate Software accepted a $11 billion buyout. So some interesting moves happening in this space right now.
Absolutely.
And then also one more thing to point out about Paycom is that it's expected to see a big acceleration in earnings growth, 93% growth expected for the bottom line.
Yeah, I mean, there's a reason why this stock has been ramping up. It was a pretty big winner in parts of 2018, so definitely one to watch.
All right, and we are still watching and waiting for earnings to come out from Google parent Alphabet. But in the meantime, we do want to take a look at that chart, potentially clearing an aggressive entry here, and whether or not it moves up or down on this earnings report definitely could be impacting how you want to handle this heading into tomorrow.
Yeah, I mean, one thing is to look at, I mean, the stock is going to move, presumably one way or the other. If it moves lower, don't want to be touching it really, because it'll be going back below that aggressive buy point, a little bit over the 200-day line. But earnings gap is also a way to play this. If say the stock gaps up sharply, that can be in a way for more seasoned investors to take advantage, because that can be very bullish, even though it can be scary to buy a stock that's just surged up, but that's a sign of real strength.
Yeah, indeed. And one thing's for sure, heading into this report, the action for Google and other big tech stocks, Facebook, has been pretty lackluster. A lot of them have had a little bit of a hard time recovering from that big sell-off that we saw at the end of last year.
Yeah, I mean, absolutely. But yeah, Google retaking the 200-day, that was nice. And we'll see how the action goes tonight.
All right, and we do have a breaking here, a revenue beat for Google. That revenue figure coming in at $39.28 billion. We do, though, have the stock moving down as a result of the report so far, down about 2.3% early after the initial figures here. But can you talk a little bit about how investors should be maybe perhaps in some instances taking this after hours action with a grain of salt. It's not always going to hold even just after hours, but also into the next session.
Yeah, I mean, Google is particularly interesting because there's all sorts of things. Oh, how much is the cost per click?
Right. Gross revenue versus other revenue figures.
Yeah, revenue excluding traffic acquisition costs. I mean, there's the growth, net income. There's a lot of numbers, and people sometimes get confused by them. And there's back and forth reaction, and then analysts write their notes. And so what happens the next day can often be very different, and that's with a lot of stocks.
Sure.
I mean, sometimes it's indicative or it gives you the direction, sometimes not. It can be pretty dicey to be jumping in. I mean, you want to watch this after hours action, but it by no means is necessarily means how Google is going to open tomorrow or close tomorrow.
Exactly, yeah. Could be an early indicator of what we do see tomorrow. And we have the earnings now coming in at $12.77 a share. That is a beat. Expectations were for $10.86 a share, which would have been a 12% rise here. But again, the stock is down initially on this report, but we do have the call still to come, though they don't issue guidance anymore.
They don't issue guidance, which makes, again, you have to interpret it, and the analysts have to think about it, digest it. It's not so clear. We're going to earn X, and it's like, oh, well, that's above what it was before. That makes it pretty obvious to ordinary investors. It can be confusing with Google and with a lot of these stocks. So definitely it's going to be interesting to watch this overnight. Yeah,
well, hey, again, we do have Paycom and Tableau reporting tomorrow night, so that's something to look forward to tomorrow. We've seen some interesting gap ups. We talked a little about this morning on our show that we've seen out of the software space. ServiceNow, one name out of the chip space, Xilinx, extending gains after a post-earnings breakout. So it's an interesting time to be looking at potential earnings moves.
Absolutely.
All right, everyone. Thank you so much for joining us today. And be sure to head to investors.com for all the details on the stock analysis we mentioned here and then some. And you can also check out all of our content across social media from Facebook to Instagram to YouTube and Twitter. So make sure you are following and subscribing for all the latest. All right, everyone, thank you so much for joining us today, and we'll see you right back here for our market update show at 7:30 a.m. Pacific, 10:30 Eastern.